what we saw in Q3 was really a broad-based rise across most sectors and across most regions. Of course, with some differences for us, the key sectors were basic materials, it was financials, and it was telecommunications, which were the strongest sectors. And on a regional basis, of course, we saw Asia Pacific, China doing well, Taiwan, South Korea, Japan, on the back of, AI optimism. They have some big companies there in that sector, and also particularly for Japan and South Korea, some how should I put it, optimism around improving corporate governance practices.
What do you think is the best way to play the AI theme when you look across the value chain and also across different regions? Because clearly you are looking across the world at opportunities in AI.
Well, certainly that is a technology that is hitting everywhere, right? And so, but our starting point is that we have a global portfolio. We're invested in something like 70 countries, 9,000 companies. So we don't have a particular kind of view on where exactly, in what region or in what part of the value chain the value is going to be mostly created. So we kind of diversify across.
Do you think that we are in a bubble when you look at valuations in AI, in particular in the United States?
Well, I wouldn't use that word. I think we see elevated pricing, but we also see strong earnings, right? And there's obviously a lot to say for this technology. However, I think the jury's out on exactly who is going to monetize this new technology in the best way. So I wouldn't say it's a bubble, but it's certainly elevated valuations at this point.
How do you navigate that uncertainty around who's likely to emerge a winner, who's going to emerge a loser when it comes to investing in AI? What's your strategy there? Is it just to invest across the board and hope that the winners are going to outweigh the losers?
Yeah, well, in our model, that is basically what we do. We spread our investments very kind of broadly, so to diversify the portfolio. And that means that, you're probably not going to make the jackpot on any single stock, but you're not going to be losing out if you bet on the wrong horses as well. Now that said, we also have a very delegated structure where we have portfolio managers that follow these companies very closely. So they might take a particular view on one company versus the others, but in the broad sense, we're kind of fully invested across all sectors, all geographies.
There certainly is a lot of debate around whether something is going to break in markets when you see some of the extraordinary asset price moves that we've seen, whether it be in gold, whether it be in AI, whether it be in penny stocks in the United States. And there's a lot of focus on the retail trader and the role that the retail investor now has in markets, what's grown into quite an outsized role, driving huge price swings in assets. Are you concerned by any of the speculative trading that we're seeing coming out of the retail investor in the U.S.?
Well, maybe not concerned, but I think it's a watch point. Not only the retail, but also the fact that we now have a lot of ETFs and derivatives markets, right? So they tend to kind of create a circle whereby everything kind of goes up. So you need to look out for that. Now that said, I think what we also see is, I return to my point of robust earnings in a lot of companies, and in particular these tech companies, and you see a lot of liquidity. So that's always a good sign for a rather healthy market. So, it's a watch point, but not overly concerned at this point.
Let me ask you now about asset allocation. As of the end of September, you were looking at a 71.2% of the fund invested in equities, 26.6% in fixed income, 1.8% in unlisted real estate, and 0.4% in unlisted renewable energy infrastructure. Is that the ideal mix?
Well, it's what we have just now. So our starting point is kind of a benchmark that we're given, 70% global equities, 30% global bonds. And then we invest in real estate and infrastructure as well. But those are smaller parts of the portfolio. So what you will see from us, in the long run with this strategy is that we're going to be roughly with this allocation. We're probably going to grow the smaller parts of the portfolio, i.e. real estate and infrastructure in the next few years. But still, that's going to be dominated by a large global equity portfolio.